life coach, music producer, and motivational speaker, Kayode Fahm there, talking about what entrepreneurs want from the government and the marketplace, including the banking sector. Okay, let's return to the stories just coming out this morning. Nigeria's Sales Managers Index report for the month of July is now out on the street, and we got an early heads on that. That reading shows optimism about Nigeria's business environment moving forward. That index finished off July 65.2. So you find three of the indicators in the basket there on your TV screen. Business confidence index was up to 93.0 in July. That reading represents exceptionally high levels of optimism about future economic activity in Africa's largest economy. This data coming from World Economics headquarters in London. Market growth index shows 63.1 in July. That's better than 61.2 in the month of June, showing the confidence about further expansion across most industry sectors in the months ahead. Meanwhile, the prices charged index, what you call the PCI, fell from 59.4 to 58.2. That's the sharpest decline since November 2014 and the lowest level since February. The last indicator there showing that salesmen are passing on price increases to businesses, and they are also passing it on to millions of consumers at, quote, robust pace, end of quote. A very busy business week starts from today. There will be some interesting meetings. The CMC meeting will be later on Wednesday, but tomorrow the Nigeria Stock Exchange, the SEC, including the Central Bank and the Interbank Settlement System, will hold a critical meeting to unveil BVN, what we call the biometric verification registration for stock market. The whole thing is coming together. Now the SEC also announced a new platform for electronic dividend payment and try to resolve one of the naughty issues in the market over 5 decades, that of unclaimed dividends. But your market is starting right now. All the doors are open. What's the view of Tunji Andrews? We'll get to him after the break. Stick around. So what's the level of progress that's been made so far with the 10-year capital market roadmap plan that was unveiled late last year? The market has been talking about this, and this week is the crucial meeting for the SEC's CMC, or what you call the Capital Market Committee meeting. Various reports will be discussed and presented to the broader marketplace, something like the Bankers Committee meeting. Okay, that meeting is later or in the week, in about 2 days from now. But we've gotten some views about that. Tempo Ashaju has been on the road talking to market operators. One of them, the CEO at Capital Banker, Hugo Igboje, has his views on this and how the capital market has been so far in 2015. Let's listen to this about 2 minutes.
Well, the capital market reflects the underlying economy. So a lot of what we are seeing in the economy is reflected. So if you look at this year, the market year-to-date is down about 10%. You know, that's reflective of maybe the perceived slow pace of action by the new government, even though they're picking up speed. It's also part of the issue of falling oil prices, economic hardship, and so on. You know, people are losing their jobs. incomes are declining, rising unemployment, and on all of those things. Yeah, you see them reflected in the market. But if you look at some of the half-year results that we've started to see for some of the multinationals, the FMCGs, you know, you see some of them, you know, profits are down 10%, 15%. So it's a reflection of the times. But the good news, though, is that we expect that the third and fourth quarter we should see activity pick up. There's also the issue of the uncertainties around the devaluation or not devaluation of the naira. So, you know, that's putting investors a bit on edge.
On a final note, we've got the Nigerian capital markets 10-year master plan in place, and that's going to be taking the center stage, right? Rather at the next capital markets committee meeting. What do you make of that framework?
I think it's bold. In my almost 30 years of being in the market, I think that's the first time we've had such a comprehensive plan. That plan basically looks at the capital market and looks at the things that must be done in the next 10 years or so to move it into at least the leading financial capital markets in Africa. And I think it has a lot of good parts. And if we can implement even 30, 40% of what's contained in there, in 10 years' time, you know, you'll see a different capital market. We're looking at a capital market that can finance infrastructure, that can finance our developmental needs, that can serve as an engine for growth and for development. And I think if you see that's what underlines that plan. So it has many good things it wants to do, but that's what's driving it. The capital market must be relevant in nation building, must be relevant in economic development. The capital market must contribute to employment, provide funds for companies to expand, to grow, and so on, so that they can employ people, so that they can drive innovation and do things that will move Nigeria forward. So I think it's a laudable development, the 10-year development plan, and I'm looking forward to next Tuesday when it will be formally launched. Not formally launched, when it will be, there's some further discussion on it here.
Okay, Higo Iboje, who's the Chief Executive Officer at Capital Bank, are talking about today, or this week's CMC meeting with the Securities and Exchange Commission. So what's the outlook for this week's markets? Your markets this week, let's remind you where we finished off last week. The market was slightly positive. On the equity side, 0.14%. That was, well, we just escaped by the skin of our teeth after the market made a roaring almost 1% on Tuesday. After the long holiday, the market went down for 3 consecutive sessions, finishing on Friday at 0.14%. But from the equity side, that was where we finished up. We're looking at interbank still very, very sluggish, as well as treasury market. Bonds remain largely bullish. Now that the central bank, under Godwin Emefiele, says to do nothing until September, we don't know what will be done in September. Meantime, we need to carry on with the markets. Let's bring in Tunji Andrews from the lead economist at TTAC Capital Africa. Tunji, thank you. Good morning, and thanks for joining us.
Good morning, boss, and good morning.
I'm sure you spent the weekend trying to make sense of the CMC or the SEC or the sorry, I beg your pardon, MPC. There are a lot of letter C these days. Sorry, I'm getting confused there. With the MPC meeting on Friday, what's your reading of the markets and the economy over the next 2 months before the next meeting in September?
I don't think we expected anything much from the CBN because, I mean, if you look at Nigeria as a whole, we tend to be very reactive to policy creation. And since the government, the fiscal side of the government has not really shown its hand, I wasn't expecting Emefiele to do anything serious. And he did say that in the communique, saying a lot of, we've not heard, we're waiting for the government to be able to do this so that we can complement with monetary policy. Although I was a bit worried, though, because
Tunji, are you there? Your voice sort of trailed off. Okay, I guess we lost him there. Tunji Andrews, who is the lead economist at TTAC Africa. We hope you can reconnect to us in the next, we got about 5 minutes left on the program for today. Let's return to one of the stories coming through this morning. If you're thinking about doing business in Nigeria, the latest SMI, what you call the Sales Managers Index. What it does is to tell you the level of confidence in the every country's economy moving forward, and that's the breaking news this morning, Monday, the 27th of July. That's the Monday taking us to the end of the 7th month in 2015. Nigeria's July SMI report shows index reading at 65.2. That's much better than the month of July, showing strong optimism or signaling, let's quote it, signals rapid economic growth during July. That's the title of the report from the World Economics in London. That's the news release just coming through. Business confidence index in that basket was up to 93.0 reading. Market growth index rises to 63.1 this month, while prices charged index, what they call the PCI, fell as consumers bear price increases by sales managers who pass them on to businesses, and they pass it to consumers as well. That's one story that you need to focus on in the current week. And if you have shares on the stock market, there'll be more earnings this week from companies listed on the exchange. Some of the banks are making everybody smile. Others are making some investors a little bit bleary-eyed. Tunji Andrews is back now on the block for us. Tunji, thank you very much for reconnecting.
Yeah, thank you for...
Could you please continue from where you went off?
Yes, I was speaking about his comment concerning the loan to states, and talking about the fact that they had to soft pedal because, according to him, a laborer is worthy of his wages. That is a very fiscal stance to monetary policy, and I was really worried about that, because when the line between fiscal and monetary policy starts to blur, people around the economy who have investments start to worry, because you don't know where monetary starts and ends and where fiscal starts.
Okay, Tunji, let me take it very specifically. There are media reports this morning, news reports, that the central bank's soft loan, quote unquote, 300 billion will start flowing out to the state governments this week under some arrangements that the central bank is yet to fully announce to everyone on the street. Give us your reading about that. That money will start going to the states. We don't know how much, at what ratio will this be shared among the states. Would it be on the need basis or on the deficit salary arrears basis?
Oh, I think that is supposed to cover the deficit arrears, and I mean that is another worry, because when you look at the inflation side, that is a lot of money coming into the economy, and we thought that there was possibility that the CBN might look at that and possibly also want to mop up liquidity in the economy, so that excess liquidity doesn't affect inflation rate, which is already at 9.2%. But the CBN did not do anything of sort, so I worry. But let's see how the CBN goes about disbursing the funds, and let's hope it's a good way.
The FARC allocation also coming into the system this week as well. Put together, if those two pots of money comes in, you're looking at something close to half a trillion naira, somehow.
Mm-hmm.
If you try to guess, that would be about 500 billion.
I mean, you want to also look at the fact that the DMO in its bond in its debt auction, they also had I mean, a bit of a cutback in terms of how much they were going to sell to the market. So that means that we're going to have excess liquidity in the market. That is not good for any economy, especially the kind that we are experiencing now. So I don't know, is the CBN trying to sort of stimulate the economy? I don't know. With all the excess, the loopholes we have here and there, I'm just a bit worried. I'm really worried.
All right, Tunji, let's leave it at that for today. We thank you very much for your time. And I'm sure you were on the social media yesterday watching those discussions about what should be the subsidy for petrol. We'll keep that conversation for another day.
I saw that.
Okay. Thank you very much. Have a great day and the week ahead. Tunji Andrews, lead economist at TTAC Capital Africa. And that's a wrap on today's edition of the program. We thank you very much for joining us on Monday. Stick around from Tuesday till Friday. We'll be here, and I'll see you very soon.